the Fed, forecast, which is like down to 3% or something by the end of the year, maybe 4%. It'll probably be higher because wages are still going up. Home prices, well, they kind of flattened out a little bit. What they call the rental equivalency is going to continue to go up. Commodity prices in a lot of areas are still higher than last year, even though some have come down a little bit. So it'll probably be higher than people think, which is why I think you may see the Fed raising rates more than people think. In fact, they were out warning people yesterday, don't expect that we're going to pivot like the implied curve shows. I hate this binary thing about recession. Their jobs are plentiful, people are spending money, people are still going back to work. It's hard to call that a recession. A lot of these numbers are highly distorted by coming out of COVID, by inflation itself. So the inflation adjustment itself makes the number come way down. So if it is recession, it's not what I call a normal recession. It doesn't mean we won't have a real one down the road, but I wouldn't call this a normal recession right now. The Fed has to meet this now with raising rates and QT. And the new part of this isn't the raising rates, it's the QT. The QT we've never had QE before like this. Therefore, we've never had QT like this. So you're looking at something they're going to be writing history books on for 50 years. What was QE? What worked? What didn't work? I think a lot of parts of QE backfired. I think the negative rates was probably a huge mistake for a whole bunch of different reasons I won't bore you with now. But they got to raise rates, and in my view, they have to do QT. They do not have a choice because there's so much liquidity in the system. They have to remove some of the liquidity to stop the speculation, to reduce home prices, stuff like that. And you've never been through QT. So all the major buyers, if you go back to 2010 and say, who are all the major buyers of treasuries? All that time, it was central banks, foreign exchange managers, banks who were topping up their liquidity profiles because we had to for regulations. All three, it won't happen to go round. Banks are topped up, foreign exchange managers are topped up, the central bank will be selling, not buying, and governments have much more fiscal deficit to finance. That's a huge change in the flow of funds around the world. I don't know what the effect of that is. I'm prepared for, I tell you, a minimum huge volatility. And the third thing is Ukraine. That you've not had a European land war since 1945. Okay, and the complexity of Ukraine is we don't know the outcome. I always make a list, if you predict the outcome. Well, you couldn't predict the outcome of Vietnam, Korea, Afghanistan, Iraq, 10 other conflagrations. All wrong. Wars go bad. They go south, they have unintended consequences, and this happens to be rolling the commodity markets of the world. Wheat, oil, gas, and stuff like that, which in my view will continue. We're not taking the proper actions to protect Europe from what's going to happen in oil in the short run, and we're not taking the proper actions to protect you all what's going to happen to oil in the next 5 years, which means it almost has to go up the price. We're not investing enough money, to keep oil a number. And for all those who love climate change, if oil prices go to 175 or 150, which I kind of think is in the cards, to tell you the truth, not in the immediate run, but down the road, then CO2 won't go down, which everyone predicts because people buy less oil and gas. It's going to go up because all those other countries out there, the poor countries who need oil and gas to feed and heat their citizens, will not buy oil and gas, they'll buy coal. That's what's going to happen. CO2 will go up, it won't come down. And we're not dealing with these challenges. So those three things, fiscally induced growth, QT, Ukraine war. So I'm going to change the storm clouds out there because I'm an optimist. I said there's storm clouds, they're big storm clouds. It's a hurricane. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy Sandy or Andrew or something like that. And you better brace yourself. So JP Morgan is bracing ourselves, and we're going to be very conservative in our balance sheet on, with all this capital uncertainty. We're going to have to take actions, and I kind of want to shed non-operating deposits again, which we can do in size, to protect ourselves so we can serve clients in bad times. And so that's the environment we're dealing with. And I think it's okay to hope that'll end up okay. I hope it. That's my Goldilocks. I hope. Who the hell knows? Europe has slowed down to 2% or something. But the problem with right now, and the economists would agree with me, we're looking at a static analysis, that if things stay the way they are. But you and I know for certain things don't stay the way they are. And my view is there's a very high chance that oil will go higher. It only takes 1 million to 2 million barrels off the market a day that can drive prices up $30 or $40. And so we should prepare for that today. I think it's great that the Western world has gotten together.
Yeah.
And who would have thought that Putin would get Sweden, Finland, Germany, Switzerland, all of us to, but that working together part, we need to make permanent.
Going back to the European economy, how quickly could we see a recession and how deep could it be?
I don't know. I mean, I hate to guess the future. No one really knows the future. I've never seen anyone really guess it well. But again, if Ukraine gets worse, I would assume that Europe's going to go into a recession. It may take a couple of quarters, but I would assume that. I think basically the Cold War is back. I think the whole world learned something that we always knew, that national security is always the most important thing, but it kind of recedes in the background. We're all doing well. But now it's the most important thing. It should be the most important thing for the rest of our lives. So maybe we all learned that is a permanent state of affairs. The Cold War is back. The allies have to coalesce, and not just for military purposes, but for global economic, strategic investment purposes, so that we've got a safe world. If we don't do that, you see Ukraine, you can see all around the world. You will see forms of chaos.